Hope you all doing well. A very quick update here on nat gas, coal and crude oil, starting with natural gas. So if you follow me on my yesterday's video, actually on my weekend's video, then I've said that price is likely to push down, looking at the fact we had a break and close below the previous low with this red candle. So coming back on 4-hour time frame, if you follow me on YouTube and if you know how I take my trade, and with that you see the price did push down, pull back, bearish engulfer right here, and then it is falling down. Looking at this fact and looking at the swing high bearish engulfing candle, I'm expecting a price to push down from here at least 6 point. That is what we have at the current ATR. So I'm expecting a price to push down. Now if the price continues to push down, we have a zone below from where I'll be looking to enter my buy trade. Again guys, when the price is pushing down in a trend, and if you have seen my last weekend video, I've shown how to take the counter trades when the price is pushing down and what price action does. Most of the time when price hit the counter trading zone, it's sometimes reverse completely, or it's just sometimes push down, bounce and continue with the trend. So that is why very important to have your stop loss and take profit. I'm expecting some bounce from here. Till then the price is likely to push down from here. I also want to show you the zones on O&A are very important so that you know when to enter your counter trade. Wherever the price hit first, I will take my counter trade. So this zone here is 2.137 goes up to 2.271, a zone from where I'm expecting a possible bounce out of, because we recently had a bounce out of this area of value. So this whole zone will be my buying zone. Now if the price won't reach this zone, mark your Fibonacci tool like this for a possible pullback. So we have a Fibonacci tool, something like this, and if you are an aggressive trader and let's say we have a pullback, this is the zone from where we can expect another fall. This is the zone from where you can enter aggressively using sell limit order, because when the price is pushing down, it always takes some breather. So if a price takes a breather, which is a pullback, then we have this buffer zone. If you follow me from a couple of years, then you know 25% till 50% retracement is my buffer zone from where I look for my sell opportunity, and I keep my stop loss above this Fibonacci tool if I decide to enter in an aggressive way. So that is what I'm looking at. Or we can expect few green candles followed by a bearish engulfer if you want to enter in a less aggressive way. So keep an eye here. If you have a pullback and if you have another red candle, then use the recent candle and just pull your Fibonacci tool to the recent candle and adjust that accordingly. Let me quickly show you on O&A. So right here on O&A, price is still falling down and heading towards the next level of support, which is 2.116 goes up to 2.181, a zone from where we can expect a possible bounce out of, because we recently had a bounce from this area. That is why I'm paying attention to this zone. Once the price stopped pushing down, mark a Fibonacci tool, something like this, and then 50% retracement will be your sell limit order if in case the price stops and takes a breather. Otherwise, if the price hits directly to this zone, this is the zone from where I'll expect some bounce before the price can fall or it can reverse. We can check the momentum accordingly. Let's quickly check gold. A nice one. So as you can see, the price did pushed up. As mentioned in my weekend's video, I'm expecting a possible push up, and with that we had a possible push up till my level of resistance, and this was the zone I've already sent to the members with some adjustments. So the new zones we have here is 1990.30 goes up to 2005.69. This was the zone I've already sent to the members on Sunday, and if you want to plot these zones on the charts, you can have these zones there. The reason I'm paying attention to this zone, because we already have this bearish engulfer, which is already my sell signal, and if you're an aggressive trader, this can be your entry and your target can be $16 because the ATR is 16. We do have a trend continuation zone that I've sent to the members that we can expect some bounce from here, and as you can see, the price is pushing down from this area, and now we can expect a possible double top as well. If you are not an aggressive trader, the way you can mark your buffer zone just from the wicks till the body, mark your buffer zone and keep an eye there. Once the price come back to this area and hit this zone, then all we need to see a bearish pressure with a red candle, bearish engulfers or 382 candle. Once we have that, I will have my stop loss there above this rejection zone and take profit whatever the ATR will be at that time. So expecting a little pullback and a possible double top. Otherwise, aggressive entry is already this bearish engulfing pattern. So let's check crude oil. So crude oil is now in the level of major support. We do not have any sort of buying condition, so I'll still look for a buy condition. We can either get a push down and condition here, or we can get a double bottom entry pattern. So whatever I get, I will enter my buy trade. I'm only looking for a buy confirmation from here, either my pin bars, 382 candles, or a double bottom move, or an engulfing pattern within this zone. In case you missed this zone, it is quite a big zone, 61.63, 65.89, a zone from where I'm looking to enter my buying condition. Once we have that, I'll go long using 1 ATR for my target. So that is it for commodities, guys. Any questions, any confusions, you can DM me on Instagram. I'll get back to ASAP. Hope you trade green rest of the week. See you guys in the next video. Till then, take care.